far right-hand side of our sitemap, I have a link to the Trade Simulator tool. I'm going to go ahead and open that up for us. And why don't you give a little description of what this tool is, Kurt, and how you like to use it?
Well, what the Trade Simulator tool is, this started out with me flipping a coin. I mean, I actually flipped a coin because I didn't understand how to do a random run of winners and losers like this. And so I flipped a coin 100 times, and I picked tails as the losing side because everybody knows that tails comes up more often, right?
Mm-hmm.
So I got 55 tails, 55 losers, and 45 heads, so 45 winners. And then I plugged that in using, why don't you show the target up there?
Mm-hmm.
Profit. I would plug it in with various levels of return, and then against various levels of loss. And I found out that if you were to do even money, let's do a 10% win target and a 10% loss limit. Now 10%, that sounds like a conservative stop order, doesn't it?
Oh, yes. Mm-hmm.
Yeah, but to me it's too much, and here's why. If you don't have more winners than losers, you're going to get cleaned out. Okay, now this tool here takes into consideration commissions, okay, and it also takes into consideration your losses and your winners. So let's go ahead and run it one time, and it'll be random results, okay, in the yellow box there where it says out of 100 trades. Okay, did you run it? Okay, good. See, this one had 47 wins, 53 losses. So if you had started with $10,000, your high value would be nearly $12,000, and your low value and ending amount here is $829. Let's run it again, okay? It's random every time, so I don't know what's going to happen. This time, if we had more losses than wins, we end up in debt. Okay, run it again, would you? I want to see if we can run it until we get more winners than losers.
There we go.
There's more winners and losers. Okay, 55 winners. Okay, 45 losers. So we took $10,000. We ran it all the way up. Look at the high value. Ran it all the way up to 27,000. Okay, but ended up doing just only a little better than breaking even. The ending amount was 11,000. And I found out that over a long enough horizon, okay, over a long enough period of time, even having more winners than losers, you can get hurt. Okay, now let's go up to the target and leave it the same. Actually, you know what? Let's make it even more conservative. Make it 8%. 8% wins. But change the loss limit to 5%. Okay, now let's run that.
Okay.
Okay, now we had just slightly more winners than losers, but even so, look at how much better that picture is. Okay, $31,000 after 100 trades. Okay, let's run it another time. Okay, wait a minute. We lost more often than we won. We lost more often than we won and still doubled our money. Isn't that something? Okay, all right, let's change that loss limit again to something that we just looked at, 5.34%. Okay, and the target, make that into 16.22%. That's what the Southwestern trade did. Okay? So if you have 50% wins, 50% losses, and you trade with this kind of risk-reward picture, you could end up with $1 million from 10,000. Yeah, run it again. Run it to where we have more losses than winners.
There you go.
There's more losses than winners. Did we still do okay?
I think so.
You bet. Okay, and here's why. Because of skewing the loss versus the reward. Let's run it one more time with the maximum loss I ever like to do is 8%, okay? 8% loss and 17% win. Run it like that. See, more losses than wins, still end up with good money.
Mm-hmm.
The reason I asked to do that is because we're going to show a trade that turned out that way.
Okay, very good.
Okay, let's go ahead and look at how to find the trades there, Mike.
Okay, no problem. Let me 1 second here. There we go. Let's just get rid of that, shall we? Okay. Oh, sorry about that. All right, so what we wanted to discuss now is looking at the tools on Power Options. And of course, what we discussed before is that Power Options was created by Ernie Zerener 11 years ago, and it's a tool for self-directed investors. Now, you see here when I've logged onto the account, I already have the married put and collar trade set up there. Kurt's going to show us later how if you don't already have a free trial to Power Options, you can easily sign up using the powerup.com/RAT link to get 14 days. But if you don't have the Married Put and Collar tabs and the available strategy tabs here on the top, just click on Other Strategies and you can select to have those viewed. Now what we want to do is when we first click on the Married Put tab, you see here that we have some overview section down in the Learning Center, some articles that Ernie wrote, and Kurt's sketch, of course. You can access at any time, and a link to more information about the blueprint, which describes Kurt's methodologies and the various income methods. And, at the end of this little presentation, I'm actually going to start the start part of the promotions because I want to show you a trade where things looked right, but I actually did it wrong. It's an actual trade that I'm in because I didn't follow Kurt's rules, and Kurt had mentioned how everyone can know how to set up a covered call, but without the blueprint, you might get into a position where you set it up wrong, and it's actually going to cost you more money. Okay? Well, what we're talking about here, Kurt describes this method for us, and using the Married Put positions for our protection. We greatly want to limit our loss, but there's 9 different income methods that you can use to generate income. Okay? But the first step is how are you going to find those stocks, Kurt? Well, you want a tool.
Well, I'll tell you what I used to do.
Mm-hmm.
I used to go on investors.com, and I'd look at the Investors Business Daily 100, and I'd scour through there, and then I'd go to freerealtime.com and look at the stock tables, and I'd crank out the numbers one at a time. Sometimes I'd find that a stock that I really liked, I liked the chart and everything. Oh, geez, it's not optionable. Okay.
So 45 minutes later, you're ready to make a trade, right?
Exactly. It would take me forever, and I would use, well, anyway, this screen here boils down out of my chosen ground. I like to look for trades in the IBD 100. Well, not everybody likes to do that. They might like to look in other lists. But look at this. This is 40 different results.
And this is actually the different
trades
list
that I could do.
Yeah, this is actually the different list. What Kurt's referring to is you see down here at the bottom, in the search settings saved as field, I have it listed as an initial value set. But on Power Options, what we can do is simply click that drop-down menu, and we'll select radioactive. And these are the basic qualities that Kurt uses to look for when he gets into a position. As you mentioned, he's using the IBD 100 list. And we've set some on that he and Ernie, Kurt and Ernie, created a screen here down at the bottom where we're using these kind of techniques that were discussed this morning. We're only looking for puts that are at least 5 months to 900 days out in time. The put cannot be more than 20% in the money. Here's the important part. We've actually increased this. We're forcing the risk to be less than 11%. Now that's just to give a wider range. But really, you see the results, Kurt. We've got 61 results here up at the top, many of which are well under 8%. This whole first page is under 8% risk, okay? What I'm referring to here is we've got the columns and the math already done for you. Here's our monetary maximum risk and our percentage max risk.
Yeah, math already done for you is the selling point for me there, sir.
And I mean,
go ahead.
I'll say honestly, a year and a half ago, before I got into contact with you and started watching your webinars and paying attention to your information, I never thought it'd be possible to get into Exxon and take advantage of the high premiums and the volatility, even the dividend, but only risking 5.1% for 6 months at a time. I would never thought that was possible. I wouldn't have believed it. But here we go. We have various different selections. McDonald's, AstraZeneca. That's where my father works, of course. So you've got a lot of good stocks here. Now, what this table shows you, of course, is the selections that match the default criteria that Kurt starts off with for the radioactive trading methodology. You have your company name, McDonald's, of course, a stock symbol, the last price of the stock, and then the put option. Here we could buy McDonald's for $59.57, and at the same time buy the June 70 put option for $12.80. Well, this makes our total net debit $72.37. That's the total we're going to put into the position, but we've reserved the right, guaranteed $70 back. So we're only risking $237. Okay? Now, this is just a default stepping stone that you can use. You see down at the bottom of that page that we looked at earlier, there's a wide variety of criteria you can use. We can screen specifically, for dividends. You can change the stock list, as Kurt mentioned. In addition to that, any of the columns or filters you can screen by to find only those positions that match your risk-reward tolerance. You can also select to view those fields in the data. Here you see I've selected the SMA 50, the average stock volume, and of course the dividend yield. Now this is interesting, isn't it, Kurt? Here you've got
Yes.
McDonald's at a 3.3% risk, and then we've got the dividend.
3.3
Yeah, that's right.
dividend yield.
That's right.
There's no risk at all.
Yeah, well, we're using a